Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now the Bitcoin ETFs just flipped, with Grayscale selling another $500 million worth of Bitcoin, causing an outflow on Friday, which caused the price of Bitcoin to reject from key short-term resistance, but is still forming this pattern that we need to pay attention to, while Ethereum is still running into critical resistance, and Cardano, along with other altcoins, are breaking out further to the upside. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, we need to talk about the Bitcoin ETF news today, because we now have the official numbers from Friday showing us what the ETFs actually did on Friday. And as we can see here, on Friday, we had a net outflow of around $139 million from the Bitcoin ETFs. And this was mostly caused by Grayscale, of course, having a significant outflow on Friday, as expected, because once again, I talked about that just yesterday, which I'll talk about again in just a moment. But first, taking a look at this Bitcoin ETF flow table, we can see that once again on Friday, on the 1st of March, we saw IBIT, which is the BlackRock Bitcoin ETF. They still bought around $200 million worth of Bitcoin on Friday. They still had around a $200 million inflow. And Fidelity, which is FBTC, still had around a $50 million inflow. So between BlackRock and Fidelity, those two accumulated close to $250 million worth of Bitcoin just yesterday. But if we're looking at GBTC, that is the Grayscale Bitcoin Trust, just yesterday, just on Friday, they had an outflow of nearly $500 million. They basically sold around $492 million worth of Bitcoin just on Friday. Because once again, how this actually works, in case you're new to all of this, these ETF providers like BlackRock, Fidelity, or Grayscale, for example, they're just holding onto that Bitcoin to back their ETFs. And so essentially, if they're seeing inflows, more money coming into their ETFs, that means they're having to buy more Bitcoin to back the ETFs, considering their ETFs will be growing if they're seeing inflows. But on the other hand, if we're seeing outflows from the ETFs, so basically if investors or institutions are pulling their funds out of their ETFs, then that basically means these ETF providers like Grayscale, for example, is having to sell the Bitcoin that's backing the ETF in order to pay out those investors in US dollars. And there's still people out there saying that BlackRock is going to dump all their Bitcoin all at once to dump the price lower to buy even more for cheap. But once again, that is not how this works at all. That's not how the Bitcoin ETFs actually work, because these ETF providers like BlackRock, for example, can only actually sell that Bitcoin if there's outflows coming out of their ETFs, which as of right now, there's still significant inflows going into the BlackRock ETF and other ETFs like Fidelity, for example. And once again, the main outflows are really coming from Grayscale, mainly due to their very high fee, because all of the other ETFs have a much lower fee compared to the extremely high fee that Grayscale is charging. And so once again, due to that massive outflow from Grayscale on Friday, that actually was more than any inflows into other ETFs on Friday. And so due to that, we saw a net outflow for the day of nearly $140 million. And so due to these ETF flows on Thursday and Friday, of course, Thursday was a small inflow and Friday was a relatively small to medium net outflow. Due to that, of course, the Bitcoin price didn't really do all that much on Thursday and Friday compared to the Monday, Tuesday, and Wednesday, where we saw significant inflows, net inflows on Monday, Tuesday, and Wednesday. And so that just goes to show that these ETFs do have a massive effect on the price of Bitcoin, depending on the inflows and outflows on any given day. And once again, we could tell that Grayscale was going to have a significant outflow on Friday due to the on-chain transactions here on the Bitcoin blockchain. And so as always, if you want to stay up to date on all of this information, which is important information, then make sure you subscribe to this channel with notifications turned on if you want to stay up to date on all of this information. And also, if you want real-time updates, then make sure to follow me on my Twitter, link down below in the description and in the pinned comment. But obviously right now we're heading into a weekend and the US stock market is closed over the weekend, which means the Bitcoin ETFs are not trading on the weekend. So we don't have any new inflows or outflows over the weekend in regards to the spot Bitcoin ETFs. But anyway, taking a look at the Bitcoin charts, this is on the weekly Bitcoin chart, and right now the price of Bitcoin is still trading well above this Fibonacci level, which was sitting at around 57 to 58,000. And so especially if we confirm this weekly candle close, which by the way, this weekly candle close happens in around 1.5 days from now. If this weekly candle close confirms above around 57 to 58,000, then we should expect that level to become new support for the price of Bitcoin, just in case we see a short-term pullback. But either way, no matter what happens in the short term, whether we see a short-term pullback or sideways consolidation, whatever happens on smaller timeframes, either way, we're still within this much larger bullish trend here on the weekly timeframe. And of course, the next significant level of resistance is still the previous all-time high, sitting close to 69,000 here on the weekly timeframe. And if we're taking a look at the daily time frame, obviously right now in terms of the larger trend and momentum at play, we're still looking more bullish than bearish. But with that being said, we're starting to slow down a little bit in terms of the momentum. So just in the short term, we're slowing down the bullish momentum. And also keep in mind that the daily Bitcoin RSI is still very overbought, which technically means we are overheated in the short term and we need some time to cool off sometime soon. And what can cool off the RSI back down towards more neutral levels is either neutral price action or bearish price action. So if we simply see a sideways consolidation or possibly a slight pullback, that can help to reset the RSI back down towards more neutral levels, which can give us more room to the upside later on. And so that's basically what happened right here. Obviously, we had a leg to the upside in the bullish trend, and then we had a bit of a sideways consolidation and a very slight pullback to the downside. And that helped to reset the RSI even just a little bit, which gave us some more room to the upside later on. And so once again, considering the net outflow from the Bitcoin ETFs on Friday, and considering the Bitcoin ETFs are not trading over the weekend, due to that, it's possible we could end up seeing a bit of a short-term cool-off over the weekend. In fact, that's one of the most likely scenarios. I would be expecting either some choppy sideways price action or possibly even a slight pullback over the weekend, just in the short term here. But once again, on Monday, when the stock market opens up again and the Bitcoin ETFs begin trading again, if we see a significant inflow again into the spot Bitcoin ETFs on Monday, of course, that will pump the price of Bitcoin if we're seeing significant inflows. And so for the time being, once again, just in the short term over the weekend, we could see a bit of a sideways consolidation, basically some sort of cool off from all of that bullish price action. And while the price of Bitcoin is basically chopping around sideways here, as we've seen over the last couple of days, here on the smaller timeframes, we're still seeing this triangle pattern form. And as I said in my last video, we were looking at more of a symmetrical triangle pattern right here. But since my last video, we saw a small fake out to the upside, basically a very small attempted breakout, and then a quick break to the downside. And so ultimately, that quick move like that actually invalidated that line of resistance right there. And once again, it was mainly due to the fact that we saw a net outflow on Friday, that we actually saw a bit of a short-term pullback over the last 1 day or so. And as of right now, at the time of recording this video, we're potentially seeing a break to the downside below this ascending line of support. And by the way, this ascending line of support is sitting at approximately 61.8K. But at least as of right now, we have not yet confirmed a break to the downside below that support because we have not yet confirmed any candle closes below 61.8K, at least as of right now. But if we at least see a 1 hour candle close, but ideally a 2 hour or 4 hour candle close back below around 61.8K, give or take, then in that case, that would confirm a break to the downside below this support, which would obviously be a short-term bearish signal. But if we end up confirming a break to the downside below around 61.8K, then that would set up a bearish price target for this triangle pattern right here. If we first confirm a break to the downside, once again, that will set up a price target at around 58.7K approximately, which from the point of the breakdown to that price target is around a 5% move to the downside. Or on the other hand, if we actually hold above this line of support and we fail to see this candle close below the line of support, and instead we see a quick break back to the upside, then in that case, if we actually confirm a strong breakout above this line of resistance right here, above all of these previous highs, which is sitting at around 63,000 approximately, then in that case, that would set up a short-term bullish price target for this pattern right here, which is sitting at around 66.4K, which would also be around a 5% move to the upside. But remember, what happens here on the smaller timeframes does not necessarily impact the larger timeframes like the weekly charts, because even if we see this break to the downside actually confirm in the short term and head towards that short-term bearish price target, obviously, even if that move completely plays out here on the weekly time frame, that move will barely be visible. But just keep in mind that is still a potential short-term trading opportunity, and even if we confirm a break to the downside, that can still make us money with a short position, for example. And personally, I take trades just like that over on Bybit, so I'll make sure to leave a link to Bybit in the description down below and in the pinned comment. And if you use that link down below this video to make a Bybit account and deposit on that account, you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And also right now, there is an exclusive Apple Watch Series 9 giveaway, which ends soon and is happening over at Bitflex, but only if you use the link down below this video. And so if you're trading crypto anyway, or if you're preparing to take the next trade, you might as well get set up or ready to go on one of those exchanges using those links down below this video if you want to get those extra bonuses or enter that giveaway. And right now, while the price of Bitcoin is basically still consolidating sideways in the short term here, we're still seeing very high funding rates here in the Bitcoin funding rates, and also the funding rates for multiple other coins across multiple different exchanges. And I talked more about this in more detail in my last video, so if you missed my last video, definitely watch that one first. But basically, all you need to know about these funding rates is if they're above 0.01%, which they are right now, then that basically means the long positions on these exchanges are having to pay that funding rate as a fee to the short positions. And so basically, while the price of Bitcoin is just trading sideways, chopping around sideways, the short positions are actually making money and the long positions are losing money even while the price is going sideways. And so basically, if we're seeing more sideways price action over the weekend, that is putting extra pressure on the long positions, and actually good news for the short positions because once again, they're earning those funding rate fees if they're in short positions. And so once again, due to that, we could end up seeing a slight cool off over the weekend, either a continued sideways consolidation or possibly a slight pullback if those long positions are under a lot of pressure. But as soon as Monday comes around, if we're seeing those significant inflows start picking up again through the ETFs, then once again, we could end up seeing another significant move to the upside, depending on the inflows and outflows on Monday. But anyway, getting into the Ethereum part of this video, this is on the weekly time frame, and right now the price of ETH is still running into this critical area of resistance, sitting in between around 3.4K to 3.5K. And so as I've been talking about recently on the channel, obviously the price is somewhat struggling around this area, which is to be expected considering it is significant resistance. But ultimately, we're still within a larger bullish trend, just like Bitcoin on the weekly time frame. And so ultimately, if or when we eventually confirm a breakout above around 3,500, then in that case, this area of resistance should become new support. And next, we should be targeting the old all-time high, sitting at around 4.8 to 4.9K, but only if we first confirm this breakout above 3,500, which right now has not yet happened. And if we're taking a look at the daily time frame, of course, right now, similar to Bitcoin on the daily time frame, we're still clearly within a larger bullish trend with decent bullish momentum at the moment. And if we're looking at the daily RSI, of course, right now, the daily Ethereum RSI, like the daily Bitcoin RSI, is still in overbought territories, technically meaning that we're a little bit too overheated in the short term. And so just based on this technical indicator right here is telling us that we should be due to see some sort of short-term cool-off sometime soon. So potentially over the weekend, once again, we could see a bit of a slowdown from all of this bullish price action. But once again, as I said multiple times earlier in the video, perhaps on Monday when the ETFs begin trading again, if we're seeing Bitcoin pumping again, that can also pump the rest of the crypto market. So keep that in mind. And so that's why I've been saying I'm still very bullish, especially in terms of the trend and momentum here on the daily time frame or any larger time frames. But it's just worth considering that during a bullish trend, of course, we can have small sideways consolidations or small pullbacks during a bullish trend. And if we're taking a quick look at the price of Solana on the weekly time frame, right now the price of Solana is still running into this significant area of resistance, similar to Ethereum on the weekly time frame. Because just like this resistance for Ethereum, for Solana, this resistance is also based on the 78.6% Fibonacci level and this previous high, which for Solana is sitting in between around $120 to $140. And so as I've been saying recently on the channel, obviously expect the price to somewhat struggle in this price range, but ultimately we're still within a larger bullish trend, forming significant higher lows and higher highs on the weekly time frame. And so ultimately, if we confirm a breakout above around $140 to continue that larger bullish trend, then of course next we can start targeting the previous all-time high, which is sitting at around $250 to $260. But once again, right now, we have not yet confirmed a breakout above $140, which means right now that is still the area of resistance to pay attention to. And if we're taking a quick look at the price of Cardano on the daily time frame, obviously right now we're continuing to see that bullish breakout to the upside exactly as expected. Because as I've been talking about here on the channel since all the way back down here when the price was underneath this line of resistance, sitting at around 63 to 64 cents, I've been talking about this bullish cup and handle pattern, which could also be seen as a bullish inverse head and shoulders pattern. But either way, whether it's a cup and handle pattern or an inverse head and shoulders pattern, we ultimately needed to confirm a breakout above this line right here at around 64 cents, and it gave us the same price target at around 87 cents. And as of right now, the price of Cardano has already made it roughly halfway between the point of the breakout and the price target. So obviously, if you took this trade so far, you should be in some decent profits by now. Because at least as of right now, at the time of recording this video, from the point of the breakout to the current price, we're up around 14% with no leverage. So for example, a 10x leverage long position would be around a 140% profit. Or from the breakout to the highest point so far, we've gone nearly 20% to the upside since the breakout, which with, once again, just a 10x leverage long position would be a possible 200% profit, tripling your capital. And also over the last one day, we have now successfully confirmed a daily candle close in the price of Cardano well above this previous high, which is another bullish confirmation signal. And of course, that previous high was sitting at around 67 to 68 cents. And we saw the last daily candle close confirm at around 72 cents approximately. And once again, if you want to take trades just like that, then check out those links down below this video to those exchanges if you want to get those extra bonuses, which is also where I trade, especially over on Bybit. And if you want to actually know how to take these trades in the price of any crypto, no matter if we're bullish, bearish, or chopping around sideways, you can profit from all of that price action by watching these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.